Hi, Strong Hands Nation, and welcome to Bull Profits Monday Market Talk. I'm Amber Lancaster. Today is July 6, 2020, and in this week's episode, we'll cover the latest economic weekly brief and innovation story of the week, the up-to-the-minute hashtag BOP, bullish, optimistic, positive developments in America 2.0, the three golden nuggets of our recent Bull Profits investment team's internal conference call, in which this week, Ian gives us his take on why now is the time to be in options for promising gains. Plus, Paul will pay us a visit with his latest market views and forecasts and mega opportunities in how you can profit from the America 2.0 stock market options rebound. And lastly, we have a very special announcement to make regarding your opportunity to be featured on Monday Market Talk as a special guest. So please stay tuned and remember to please subscribe to this channel, the Paul Mampilly YouTube channel. And this channel, and with your subscription, well, you know it's free. Plus, it supports the channel and lets you know immediately when new video content is posted and uploaded. So let's get started. The latest round of U.S. economic releases is record-setting. Here are three recent surging economic releases that shocked the market. First, last week's huge record rebound in the May U.S. pending home sales index showed a big jump of 44.3% to a three-month high of 99.6. This number exceeded all forecasts, as economists were expecting an increase of just 19.3%. This index is a major leading economic indicator for pending existing home sales, as it tracks signal and signed real estate contracts for existing single-family homes, condos, and co-ops. And this number helps confirm that our Bull Profits housing forecasts that millennials, currently the largest generation in the U.S., are and will be entering the first-time home buyer housing market. And as a study from Zillow noted, nearly 45 million Americans will reach the typical age of first-time home buyers in the next 10 years. 3.1 million more than 10 years prior. So couple that with record low 30-year mortgage rates, and you get a record-setting pending home sales number. Second, U.S. June ISM manufacturing gauge jumped by 9.5 points to 52.6. This is the highest reading in 14 months and biggest monthly increase since August 1990. A reading above 50 actually indicates manufacturing is expanding. And third, we saw good news on the U.S. job market front, where 4.8 million jobs were added in June, beating estimates of 3.2 million and dropping the unemployment rate by 11.1. But what's most notable is that in the report, that payroll revision showed that the U.S. added 90,000 jobs in the prior 2 months. So these three latest mega releases rebounds actually show us that the U.S. economy is steadily finding its sure-footedness. So where upcoming economic releases are concerned, this week will be relatively quiet, but no less important. There will be four major releases. NBA mortgage applications will be on Wednesday at 7 a.m. On Thursday, weekly jobless claims and the final print for May wholesale inventories month over month will post at 8:30 a.m. and 10 a.m. respectively. And June's producer price index final demand month over month will post on Friday at 8:30 a.m. Now for my up-to-the-minute hashtag BOP, bullish, optimistic, positive developments in America 2.0. Per the National Association of Home Builders, or NAHB, the U.S. 30-year fixed-rate mortgage, well, it averages now 3.07% last week, the lowest ever recorded by Freddie Mac since the index began tracking in 1971. This record low, coupled with a brand new FICO scoring tool from Fair Isaac Corp, spells a boom for the housing market. The widely used FICO credit score is getting a major makeover, introducing to you the FICO Resilience Index. This new index is created to, quote, supplement the FICO score and is aimed to help lenders assess a borrower's ability to withstand economic downturns, even if they have a low credit score. The index pulls together personal financial information from before and after the Great Recession to measure a person's chances of paying their bills on time during economic volatility. So measuring on a scale of 1 to 99, lower scores indicate greater financial resilience in an economic downturn, while higher scores indicate more sensitivity to economic shifts. So per the Vice President of Scores and Analytics at FICO, the hope is that it will allow lenders to continue to be able to make prudent loans. So Fair Isaac's new scoring tool places less weight on missed payments and greater emphasis on lower account balances as well as credit use, end quote. So for the innovation story of the week, feast your eyes on this US map. This map ranks America's most innovative states based on Bloomberg's annual State Innovation Index. And as this map can tell you, it can actually spell profits for you. For the second consecutive year, California and Massachusetts took first and second spots. Rounding out the top 5 are number 3, Washington State, number 4, Connecticut, and number 5, Oregon. So the ranking is based on, quote, 6 equally weighted metrics, and the top 5 highest value private US tech companies are all in California, which includes SpaceX. And among the US companies that went public last year, 5 garnering the highest year-to-date returns were also in California. These companies are producing big profits for early IPO investors. And the companies are Zoom Video Communications, IT service provider Fastly, and Livongo Health. So now it's time for a brief listen to the 3 golden nuggets this week taken from our internal investment team call. This week, Ian Dyer explained how we're now heading into option season. Implied volatility ranks are going up for a lot of stocks. He also notes that 39 companies have IV ranks above 70%, and there's also big anticipation and big volatility going into the option season for select stocks, including those in cloud stock industry, semiconductors, as well as payment stocks, in which he actually gives some specific names. Lastly, he shows us how a lot of the technology stocks have very high IVs right now, which suggests big moves for the upcoming earnings season. So please take a listen to what Ian had to say in our call this week.
Options, I want to talk about IV rank, which is like gives a relative perspective of implied volatility, which is basically the volatility that the option market is predicting for any given stock in the future. So IV rank kind of tells you where the current option IV ranks among each of the daily ones over the past year. So the lowest ones, which I consider below 30. So these are the stocks which have like really low implied volatility, which means the option market is saying that these stocks are going to kind of be flat over the next month or so. There were 7 stocks in that group below 30%. 2 of them were pot stocks, 3 were biotech, and 3 were cloud. So biotech and cloud, obviously, there's a lot more than 3, so I don't really consider that a big deal, but I only have a few pot stocks in this list. Those stocks have kind of lost. They rallied pretty hard in May, like mid-May, but they've kind of flattened out since then, so that makes sense to me. So not many with low IVs. That 7 number came from my watch list, which has over 200 stocks. So not that many really have low IVs right now, which makes sense because we're heading into option season. And alternatively, 39 of these stocks have an IV rank above 70%, which means that the IV right now is higher than it's been 70% of the days in the past year. So IV is going up for a lot of stocks because we're approaching earnings season. Some trends stocks, Facebook, Twitter, Snapchat, and Netflix, which I kind of consider in that group because it trades kind of alongside Facebook. Those are all high IVs. Cloud, we saw a lot. CrowdStrike, Shopify, Atlassian, Teladoc, Fastly, RingCentral, ServiceNow, and Cloudera. So that is 8 cloud stocks, and most of those are actually over 80% IV rank. So big anticipation and big volatility into option season for those stocks. Semiconductors, there were 5 in there: Teradyne, Lam Research, Xilinx, NXP, and Qualcomm. And then like the big payment stocks, like all of them, Visa, MasterCard, Square, and PayPal. So a lot of tech stocks have very high IVs right now, which suggests that there's going to be big moves during earnings season. So that's what I'm seeing in the option market related to IVs right now.
So thank you, Ian, for those insightful options outlook insights. Now let's hear from Paul Mampilly, who actually has his take on current market conditions. Hey, Paul, please share what's on your mind.
Thanks, Amber. And as you know, we had our investment call meeting on Thursday, and I laid out what I believe is going to happen, which is that this is going to be a historic recovery that is just going to be something that most people, including the vast majority of people that chose to sell during the crash, stay in cash. And there's trillions and trillions of dollars of money that is assigned to go into stock accounts. We're not talking about just random amounts of money, cash money sitting around. We're talking about money that is in investment accounts and is generally allocated to go into stock markets that is all largely sitting outside. And I believe they are going to come into the stock market and bid stock prices, America 2.0 stock prices in particular, higher, because I believe that we are going to recover. And from there, our economy is also going to make new highs, which is why, I'm going to say it, I'm still bullish, still optimistic, still positive on America 2.0. Things are unfolding pretty much as we laid out to you, which is that we told you that the markets would recover and go back to where they were with respect to our kinds of stocks, America 2.0 stocks, megatrend stocks, stocks associated with the millennial generation and Gen Z coming after them. In other words, the growth part of the economy, we told you, is still growing. And for sure, for a short period of time, there was an interruption. However, housing data, now industrial data, as Amber laid out, it is all confirming what we have been telling you now for months upon months, which is why our stock portfolios, without being boastful, are booming, completely booming. I believe that our readers are making extraordinary, incredible amounts of money, which is why I want to tell you about a special promotion that my publisher is doing this week. It is for a phenomenal, and when I say that, I am not exaggerating, it's a phenomenal service that I run with my amazing colleague, Ian Dyer, and I had him look up these stats just because they are, you might think they're unbelievable. However, just let's lay this out, So this is an option service. In other words, we use the option markets to generate gains that, for the most part, you would need to be in stock market trades for, at the very least, months. And in many cases, for many years even. So look this up. I'm just going to bring these up here, which is that Ian went and looked these up for me. And he said, since March, which is about the bottom for the stock market, we've had, listen to this, 18 wins and 0 losses. And the average gain during that period of time across these 18 wins is 56%. The average holding period is 25 days. So in other words, less than 1 month. And we had some of the best trades to lay it out there. Grubhub is our biggest gainer. And just listen to this, 102% in just a little over a month, 33 days. And then we did Teradyne, which is 63% in about a week, 7 days. And we've got 8 trades are currently open. The highest gain that we've got is 111%. I don't want to give the name. We've got many, many others. Phenomenal service that I believe is really benefiting from what happened during the crash, which is why we've been able to do this, which is put up trade after trade, trade after trade of money-making trades that's making big money that you would normally wait many months, if not years for. So still want to say, I'm still bullish, still optimistic, still positive. And I believe that America 2.0 stocks, those stocks I believe can keep running for a long period of time because I believe that the markets still have not really priced in the level of growth that is coming. Now, as you know, Amber has taken over Monday, and I show up as a guest from time to time. Thank you, Amber, number one, for having me on. And we want to include you into the new versions of our Monday Market Talk. And so if you would like to be featured, starred on Market Talk and talk with Amber about your gains, your portfolio, your successes, your dogs, your pets, your cars, really about your kids, something that you share in common with our Strong Hands family, Strong Hands Nation, Bold Profits, and Amber and our team, please send an email to Amber and contact us in the way that Amber has mentioned to you, and we will try and work something out where we can feature you on Amber's Market Talk. And with that, Amber, back to you.
Thanks, Paul. That's right. Just as Paul just announced, we would like to invite you, Bold Profits Nation, to be featured on Monday Market Talk. We can chat about your stock trading experiences with Profits Unlimited, fun factoids about your life, about you, and what you do. Please email us at boldprofits@banyanhill.com. Looking forward to your responses. And also know that you can follow me on Twitter at a Lancaster Guru. Thank you so much, everyone, for tuning in this week. And until next time, take care.